Hey everyone, welcome back to Corporate Decoder, the place where we try to figure out if the company is secretly juggling chainsaws while balancing on a unicycle. Today we are diving deep into Broadcom Incorporated's latest filing to see what's really going on behind the scenes. This report dropped in September 2025 and it's got some chunky financial moves including a massive debt issuance and some significant redemptions. Stick around to understand what this means for you. And hey, if you like uncovering these corporate plays and getting straight talk on finances, don't forget to subscribe. Also, we have a great community over on Discord. The link is in the description. So, the big event, the news that really jumps out from this filing is about Broadcom Incorporated issuing a whopping $5 billion in new debt. That's a massive amount of borrowed money, and it is coming in 3 different flavors. They inked a deal with some big name banks like JP Morgan Securities Incorporated, Bofa Securities Incorporated and BNP Paribas Securities Incorporated. These underwriters are essentially helping them sell this debt to investors. The company is selling $1 billion of senior notes that mature in 2030 with a 4.200% interest rate, then to raise $2.25 billion of senior notes due in 2036 paying 4.800% interest, and finally $1.75 billion of senior notes maturing in 2038 carrying a 4.900% interest rate. This whole debt offering was set up using a registration statement filed back in July of 2024, and then just a few days before this report, they filed an official prospectus supplement. This is standard procedure for such a large sale of debt, basically telling everyone who might buy these notes the important details. Let's talk about what these notes actually are. They are unsecured, which means they aren't backed by any specific company assets, and they are also unsubordinated. This sounds complicated, but it basically means that if the company ever runs into serious trouble, the people who lent them this money will be treated the same as other general creditors. They have an equal claim to be paid back along with other unsecured debt. A key detail here is that these notes are not guaranteed by any of Broadcom Incorporated's subsidiary companies. What that means in plain English is that if a subsidiary has debt, that subsidiary's debt would get paid back before any money can be sent up to the parent company to pay off these new senior notes. So these notes are what we call structurally subordinated to the debt of the subsidiaries. This is an important risk factor to consider for anyone buying these notes. Now, here is another big piece of the puzzle happening concurrently. Broadcom Incorporated subsidiaries, namely Broadcom Corporation and Broadcom Technologies Incorporated, along with subsidiaries AA Incorporated and VMware Incorporated, are actively calling back or redeeming a significant amount of their existing debt. They are essentially buying back their old bonds before they are due. They are redeeming over $2.9 billion of their 3.875% senior notes due in 2027. That's a huge chunk representing the entire outstanding amount of those specific notes. They are also redeeming about $215 million of their 4.700% senior notes. Again, the full amount outstanding, and they're redeeming $500 million of their 4.650% senior notes, also the entire amount for that series. These redemptions are happening at a price that is 100% of the principal amount plus some extra costs. This extra cost represents the present value of the remaining interest payments that the bondholders would have received if the bonds weren't T-redeemed early. Think of it as a penalty for calling the debt back, but also a way to smooth things over for the investors. So, what is the overall story here? Broadcom Incorporated is essentially restructuring its debt. They are taking on a massive amount of new debt and simultaneously paying off a significant portion of their older existing debt. This is often done for a few key reasons. They might be taking advantage of lower interest rates on the new debt compared to the old debt. They might also be simplifying their debt structure or renegotiating terms that are more favorable for the company going forward. The fact that they are redeeming the entire outstanding amount of these older notes means they are really cleaning house on that specific front. The key takeaway for investors and observers is that Broadcom Incorporated is making a bold move to manage its liabilities. They are strategically adding to their debt load, while also shedding other portions. This suggests a confidence in their future ability to generate enough cash flow to service both the new and old debt, and potentially refinance it again down the line. However, the structural subordination of these new notes to subsidiary debt is a critical point. It means that in a worst-case scenario, the lenders of these new $5 billion in notes would be lower in the pecking order for repayment, compared to creditors of the subsidiaries. Looking at this strategy, it signals a very active approach to financial management. It's not just about growing revenue, but also about skillfully managing the company S balance sheet. The company is clearly betting on its profitability and stability to handle this increased leverage. The challenge will always be to generate consistent profits to meet these obligations. Now, what does this all mean for Broadcom Incorporated moving forward? Well, taking on $5 billion in new debt is a big commitment. It means higher interest payments will be a regular feature of their PSOL, or profit and loss statement. Their success hinges on their ability to generate strong cash flows from their operations to not only cover these new interest costs, but also continue to invest in their business and, of course, pay back the principal when it is due. The move also indicates that they likely see opportunities to use this capital for growth or strategic investments that they believe will generate returns greater than the cost of borrowing. In my opinion, Broadcom Incorporated is playing a high-stakes game of financial engineering. They are clearly trying to optimize their capital structure. The immediate risk is the increased financial burden of servicing this new debt. If their revenue streams falter or if unexpected economic headwinds hit, this leverage could become a significant challenge. However, if their core businesses continue to perform strongly, this debt issuance could unlock further growth and efficiency. The fact that they are also redeeming their older debt suggests a strategic cleanup, which is generally a positive sign of management wanting to simplify and strengthen the company's financial position. Alright, that is our breakdown of Broadcom Incorporated S latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this debt move is smart or too risky? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.